How to safely make 30% a year investing. Portfolio Builder offers two core strategies to investor. One is called the Safe Growth Pro, and the other is our high risk formula. Now, if you were to put money behind the Pro 90% and 10% of your money behind our high risk formula, you'd be sitting on a 28% year to date return. If you did an 80-20 mix, you'd be up 40% year to date, and with a 70-30 portfolio, you'd now be up 52%. Had you only followed our super safe strategy, the Safe Growth Pro, since conception, you've had very steady returns while reducing volatility of the S&P 500 by over 75%. In fact, in every major correction in the stock market, our clients have netted a profit. Let me repeat that. In all crashes over 30%, this strategy delivers profits, not losses. For example, in 2018, when we first started the service, we were in the Christmas massacre with a 20% crash in the S&P 500. We netted a 1.1% return. During the trade war of 2019, you had markets going up and down the entire year. We barely had more volatility than 1% the entire year and brought home a 17% return. In fact, we reduced volatility by over 90% in 2019. In 2020, with a historic Great Depression level crash in March, we made investors 8% profit with this very simple risk parity strategy, netting out a 15% year-to-date return. In 2021, we're already up 13% and are on track to have our best return in our company's history. Let me show you how we allocate capital. Now, what I want to recommend to you today is, in a moment, to click the link below and test drive $100,000 behind our program for 14 days free, no credit card. I'm highly confident you'll make far more than the cost of our service fees in your free trial if you test drive this small amount of capital today. Let me just break you down with our current trading formula, allocating $90,000 into the Safe Growth Pro and then $10,000 into our high risk formula. Now again, when you sign up for the free trial, you'll get the most current trade alert update with any modifications. So just think of this as a sample of how we allocate capital. In our portfolio, we like to think of the market as deflationary or defensive, or inflationary, offense. We're always going to have a balance of defense and offense. On the defensive side right now, we're completely out of US Treasuries. If you're holding a lot of bonds, I warn you, central banks have printed over $16 trillion in just the last year to suppress interest rates. The second they start to taper bond purchases, you're going to see interest rates rise rapidly. Furthermore, we're only so long away where the Federal Reserve is going to start having to hike interest rates. You really don't want to own US Treasuries or bonds for quite some time as a deflationary hedge. Right now, the only asset that makes a lot of sense to protect your portfolio is the VIX. All you need to know about the VIX is if stocks go down 1%, the VIX tends to go up 10%. Now, if stocks go down 2%, the VIX can actually go up 30 to 40%. It's all about the speed and how much acceleration to the downside there is. We never allow our clients to have less than an 8% crash insurance hedge. And if we think we're nearing a severe drawdown in stocks, we'll get you loaded up on this VIX product. So right now in the sample trade alert, you'd be picking up 275 shares of UVXY to protect your capital against a stock crash. Furthermore, we want to allocate capital to the three largest stock markets. You need to realize that the trend is for whichever continent outperforms for a decade, they will not outperform for the next decade. In the 80s, it was all about Japan. Tokyo was worth more than all of California. They were going to take over the world. In the 90s, it was all about the European Union. Europe outperformed US stocks 5-1. From the 2000s to 2010, emerging markets outperformed US stocks tenfold. It's only in the last decade that the NASDAQ has really dominated. And when we can see that we're in the face of severe inflation, of massive rotation out of growth to value as interest rates are pressured higher and higher, you really don't want to be betting the farm on what's been the best performer in the last decade. You need to diversify. We actually think you're going to get far better returns in Asia and Europe because they have not blown out their deficits as much as the United States has. Also, all of the money printing in the US is primarily benefiting China. So you really want to spread out your capital for the coming decade. We have our clients long 22% in UPRO or 178 shares. This gives you 3 times leverage to the S&P 500. Far better than just being loaded up on the FANG stocks if you're going to play US markets. Next, we have EDC with 178 shares, also 21% of our portfolio. This gives you beautiful exposure to 4,000 companies in Asia, targeting primarily China, India, South Korea, and the surrounding territories. Next up to bat is our exposure to Japan, Europe, and Australia with EFO. This is also a 355 share position, 21% allocation, evenly dividing your capital between the 3 largest stock markets. Now, if you're primarily long FANG stocks, realize that's a $10 trillion market cap, highly risky, extremely overvalued, and really at risk if interest rates rise and commodity prices go up. By following our strategy, you'll be in a $110 trillion stock market, or in other words, the super rich have 11 times as much money invested in the indexes I'm placing your capital in compared to the FANG stocks. We're on hold right now to go long gold and rare earth metals because we're worried that interest rates are going to rise. We have a small GBTC position with 89 shares. We have a small silver position with AGQ with 89 shares. And then we have a relatively large oil and gas play, anticipating oil is going to surpass $100 as the current policymakers seem content creating hyperinflation in this economy. The play for that is NRGU, which gives you 3 times leverage in the top 10 oil and gas companies. You'll pick up 89 shares of that ETF as well. Now, I'll be providing you a daily update every morning, letting you know if there's anything to do in your portfolio. I only average 1 trade alert per month. That's because the economy is just not changing that quickly. It makes 0 sense to be hyperactive in your trading. You'll be rest assured every morning that your portfolio is safe and sound with a daily update on your profit loss for the month and year. We provide 2 premium webinars per week where we do live Q&A for all members, plus an orientation webinar every Monday, Wednesday, Friday. This strategy really is much smarter than any other system you could possibly put together to secure wealth, outpace inflation, protect against inflation and the eventual crash in one simple strategy. Now again, this is our super safe strategy that has crushed volatility, outperformed markets, and made money in all severe market crashes. Let's talk about how to add a little extra alpha to your portfolio with our high risk portfolio. Now, we're going to dive into some rare assets that are scarce at this point in time with low market capitalization. We're talking about Ethereum, Chainlink, Cardano, Polkadot, and Litecoin. Now, if you don't want to get involved in these types of investments yourself, realize we also have a private equity opportunity where we will do this work for you. But again, you must be an accredited investor. So you'll have the option to manage the high risk portfolio yourself or outsource that work to our company for a very, very small annual management fee. And again, we take 0% of your profits. We make this extremely efficient and highly profitable as well as passive for our investors. With the high risk system, we would recommend you get $10,000 of capital, put 45 into UVXY, 1.11 into ETH, 25.88 into Link, 462 into ADA, 29 into DOT, 4 into LTC, 7 into NRGU, 48 into Vail, Monopoly, and Nickel. Critical for this whole climate change agenda that's getting shoved down our throats for the next probably 4 decades at a minimum. And then Piedmont, who has a special deal on lithium in North America for Tesla. Now, I'd like you to take a free 14-day trial and test drive a $100,000 portfolio. What I've shown you is the current trading plan that all of our members are following with great levels of success. However, as time passes, this might be slightly getting changed. So I really want you to sign up for your free trial so I can send you the most current trading plan. You're going to get 3 orientation webinars every morning, Monday, Wednesday, Friday. So for 2 weeks, you'll have 6 total orientation webinars. On top of that, you're going to get access to our premium webinars every Tuesday and Thursday for a total of 4 free premium webinars. In the orientations, we're going to go over the basics. In the premium, we're going to look at every economic data factor that you need to be focused on to predict the future of markets, the key risks to be hedging against, and how to play the future opportunities that are coming our way. So please take a free 14-day trial and test drive $100,000 behind our system. We're confident you'll make more money than our advisory costs in less than 2 weeks if you put this to work today. Disclaimer, trading is risky and you can lose your entire investment. At the bottom of our website, you can read this disclaimer in full when you click the link below. So now is your chance. Take a free 14-day trial and test drive $100,000 between our Safe Growth Pro and High Risk Formula. You will not regret it, and we look forward to welcoming you in the door and making sure you completely understand how to follow this program. Now, you're going to have 2 options. The Pro strategy you must manage in your own stock account. The high risk formula you can either do yourself with our high risk formula or outsource that work to us for a very small management fee. To qualify, you must be an accredited investor. This is part of the law system that makes this possible for you and only you. So once again, take a free 14-day trial and test drive $100,000 right now. We want to show you proof our strategy works.